please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, the SGX Nifty is indicating that we'll have a decent start, 25 points in the green. Ashwani, Gujral, Sudarshan, Sukhani and Mitesh Thakkar now join us. Good morning, Ashwani. If we have a 25-point uptick and the way Asian markets are moving, you reckon there could be some short covering, or is this going to be a perfect sell on rally opportunity for you?
Well, good morning, and to the extent that yesterday, last half an hour, we got sold pretty hard because, crude was behaving a bit funny. To that extent, you can have your 25, 30, 40-point rallies, but I think we will grossly underperform, and maybe by midday, the bulls will give up and, bears could come in really strongly because 11,250 is within sight. And if you, have momentum selling today, those levels could get taken out. Yesterday, Europe was higher. I think Asia was also higher, but we fell. So, global cues don't have much to do with us. And you have rupee, which is almost at fresh lows. Crude, again, anything that moves 50 cents from here, can really change the dynamics. That way, I would sit out whatever rally that you have and get ready to push in the shorts, because some consolidation will happen which will look like a mild rally.
Okay, but in that rally, will you sell aggressively?
Yes, the moment that rally seems to be over, you must sell, and the market looks ready for further downside. This could just be a pause.
Good morning, Sudarshan. Would you share, are you going to be pressing some shorts when the market rallies, if the market rallies?
Good morning, Lata. And no, I'm not looking at short positions at all, not even yesterday. We are only looking for support to hold and then to consider buying. The markets should go into a huddle, into a trading range before they decide to go further down or up, but most probably down. But it's too early or easy a trade that the markets simply keep on going down. So I would be a buyer. Yesterday we thought 11,400 should hold and then we will buy. That support did not hold. But the theme continues. 11,300 in the cash Nifty should hold today morning. If it holds, I would be a willing buyer in the Nifty and actually carry positions even for tomorrow, which is a holiday. So buy if the Nifty cash holds above 11,300, avoid the Nifty bank completely.
Okay, interesting. So, not looking to sell into the market. Mitesh Thakkar is also with us. Mitesh, hi, good morning. The Sensex is now down 800 points in 2 days. You think most of the selling pressure is out of the way, or would you expect more downsides? And how would you approach the index?
Good morning. So I think eventually I do expect more downsides. Today would be a slightly difficult call given the fact that, as you highlighted also, the indices have fallen heavily for the last 2 days. My worry comes from the bank Nifty, where I expect 26,200, 26,150 to be tested and eventually taken out, and I am looking at 25,800 as the near-term target, with possibility of further declines being there. So I think the bank Nifty will clearly underperform. If I have to short between the two indices on bounce back, I'll still choose the bank Nifty, and I think now getting past 26,700, 26,750 or thereabouts would be extremely difficult for the banking index. So anything closer to that would be an ideal shorting position. Having said that, the overall idea should be more bearish, but today could be a slightly different kind of subdued day.
Okay, let's talk about individual stocks then. Ashwani, what's on your list then?
See, Indigo is a sell with a stop of 870, target of 835. LIC Housing is a sell with a stop of 472, target of 450. Escorts is a sell with a stop of 765, target of 750. HCL Tech you can buy with a stop of 1070, target of 1110. And Gaba you can buy with a stop of 465, target of 482.
Okay. Well, Sudarshan, what would you trade today?
Well, I'm looking because I'm upbeat on the Nifty, at least, I mean, for the time being, and assuming that a surprising rally could come. If it doesn't, we get stopped out. I'm looking at large caps to buy. Dr. Reddy's, again from the favorite pharma sector, is a buying opportunity. Go for it. If the trade closes strong, carry it forward. HCL Tech, same reasons. IT is strong. The chart is excellent. It's just waiting for a small market rally to go much higher. That's a buying opportunity. And the third is Hind Unilever. After those 3-4 days of declines, liver has stopped falling, and the slightest of a rally should see it go up. So I'm betting on large caps. Two short selling ideas which are again easy: India Bulls Housing Finance. I'm very downbeat on NBFCs, and Z, which is in some kind of a bear market.
Okay, so betting on the large cap names, and HUL is one of your top buys. Mitesh, what about you? What would be on your list this morning?
So I have the solitary buy call is in Biocon, where the pattern is quite strong, and the candlestick also yesterday suggested continuation. So that's a buy with a stop at 663 for targets of around 705. 3 sell calls. Container Corporation has broken an important pivot. Sell with a stop at 628. Look for targets of 585. Oriental Bank, the indicator setup is negative, so sell with a stop of just above 75 in the cash and look for targets of around 68. And Allahabad Bank is a conditional sell. If it breaks 39.5, that's a pivot level. So then sell with a stop at 41 and look for targets of around 36.
All right, gentlemen, thank you very much for joining us. Welcome back. The market setting at the moment still looks in the green, but let's analyze some of the news that we have got overnight and their impact on stocks. Mr. S.P. Tulsian of sptulsian.com with us. Good morning, sir. First up, the AMCs. Now they have to pay a little more. They have to charge their customers a little less, about 0.5% in very large AMCs over 50,000 crore. Now, various brokerages are giving us some estimate on Reliance. It may be a 17% impact, HDFC, AMC, 25%. How do you approach these stocks?
See, Lata, maybe one has to be very selective, because in fact, if you see the situation going forward, the things are seen to be going positive for the investor friendly. But we have been taking a call that you have started seeing the listing of these mutual fund stocks, on the bourses. But if I just take a positive call, we continue to have a positive bias on the HDFC, AMC, and not on the other mutual fund stocks. Because even if you see this reduction in the mutual fund, ultimately the flow or the pace at which the things are flowing in, and in fact the incremental or maybe the mix of the equity and debt, which is seen more than 50% for HDFC, AMC, is seen to be working in their favor. And in fact, if you take the valuation call also, on the listing day, if you all recall, all the unanimous buy call were given, and post that the stock has corrected by about 20%. So but one should not perceive this reduction as negative for the mutual fund, because ultimately it is the growth which will be driving the earnings of these mutual funds. It is something, it reminds me of the 1995 when the custom duties, got reduced from 120% to 20%, when the Indian industrialists were all crying that they will not exist. So this is not that one should not view this as a negative for the mutual fund sector. In fact, the momentum and pace, the growth which will be seen is going to drive the industry going forward, and which will be quite advantageous for the larger mutual fund companies.
Mr. Sen, good morning. The other stock that I wanted to discuss with you is Wipro, if you have looked at that, because that's been moving in just one direction, up 10% this month, correcting a lot of its underperformance compared to the sector. What's your view on the stock?
See, Anuj, maybe this is catching up now, because if you really take a call on all other IT stocks, maybe whether it has started with TCS, I'm referring the price behavior of IT stocks, the larger ones in this last 4-5 months. It has started with TCS, followed by HCL Tech, then Infosys, and then Tech Mahindra. In fact, Wipro has not seen having participated at all, and in fact, many of the mid-cap IT stocks, maybe like Tata Elxsi, Cyient, and Persistent System. In fact, all of them have performed quite well. So maybe this is just seen a catch-up, but I won't be taking even at the after the stock seen having risen by about 10%, the investment call now on the stock at the current level.
Okay, Mr. Tulsian, good morning. I wanted your views on Titan. There is a fear that the possible hike in import duty on gold would impact names like Titan. This morning, in fact, CLSA has downgraded Titan. They've cut the target price to 720 versus 1050 earlier. How do long-term investors approach this stock now?
See, Sonia, I think if you are a long-term investor, remain invested, because if you go by the statement of the MD of the company, Mr. Bhatt, he has been very clear that the kind of growth targets which have been given till 2023 is indicating 22 to 24% growth in the jewelry segment, and that is going to be seen quite positive. Coming specifically on the gold import duty hikes, that will be seen as a pass-through for the company. It may be sentimentally for a couple of days may look negative. positive. Now coming on the near term or maybe for next 2-3 months horizon, in fact we have initiated a buy call on the stock for last 2-3 days, because if you really see the trading range of the stock, it is moving in a range of maybe about 820, 830 to about 900, 910, and now it is ruling at a lower end of the range, and in fact maybe Q2 would be seen little softer, but it is not that you have the Q2 numbers due maybe at least after 1 month away, and you cannot expect the shares to fall further. So in fact we have been initiating buy call, and if you are a long-term investor, I think the current price warrants an investment at the current level.
Okay. Well, the other stock I wanted to ask you, Mr. Tulsian, is realty stocks. Increasingly we are getting brokerages saying that probably the stocks are troughing out, and that they could be buy candidates. Just this morning we have a positive report from Citi, and they're recommending Phoenix Mills, though they still keep a sell on DLF. We have a Macquarie report saying Prestige and Phoenix Mills are buys, and I think yesterday we had even Morgan Stanley saying Prestige, Oberoi, etc. are buys. Your take on the sector, and what stocks do you like?
See, Lata, in fact, we have the positive view on the realty developers. Now, if I take a call on Phoenix, in fact, it cannot be, they are just the real estate company, on which they have the annuity income. I won't be calling as a developer, but if you really go the situation going forward, in fact, after this GST and RERA, 1 year have elapsed on both, and that has seen a seamless integration now happening, and probably the demand have started picking up in the if I take a call on the Mumbai region. In fact, the demand has been seen quite good in Bangalore, in the southern part of the country, and in fact the things have started improving in the Mumbai region also, maybe with the ticket size of up to 2 crore. So the concentrated buying, which we have not seen having taken place in the city for the last about couple of years, is seen to be is coming in now. In fact, the permissions have not been given by the Bombay municipal corporations, maybe because of the fire issues and all that. So not much new projects are coming in. So yes, we are in fact keeping quite positive view, and in that context, maybe our first pick from the Mumbai real estate will be Indiabull Real Estate, because they will be completing their blue project, at Worli, for which the possessions have already started being given to the buyers. So yes, keeping positive view from the Mumbai real estate, I have a positive call on Indiabull Real Estate. We continue to be positive on the Prestige Estate and maybe Sobha also, because the kind of performance which we have seen from Sobha, maybe DLF will be little, will be on the hold, not giving a buying recommendation. But these 3 stocks are looking good from real estate sector.
Okay, Mr. Chan, we discussed this yesterday as well. Is the sugar rally over with the move yesterday, or is this just a correction in this ongoing big rally?
See, Anuj, in fact, I have been saying this, you need to look to the fundamentals of the sugar sector per se, going forward. And I have said that there will only be the cut of the halt on the losses. Probably you can take a call that if the 10 million ton of sugar production is diverted for making ethanol, because this coming season sugar production is estimated, if I just go on the old formula, sugar production is estimated at 35 million ton, which cannot get absorbed. If 35 million tons sugar gets produced, the prices will fall to 26 rupees. Which will see huge losses being incurred by the sugar company. So if the 10 million ton sugar is diverted for making ethanol, then you can rest assured that the realization of the sugar will be closer to about 32 rupees per kg, plus the realization from the ethanol also. On the end, it works out on parity, with the way, if you sacrifice the sugar production and make ethanol, you have a parity, because after the increase in the ethanol prices being seen from B molasses to 53 rupees per liter. So I won't be taking it as an incremental something, positive coming in on the earning fronts, which we have seen in case of FY16 for the sugar companies. This is just that there won't be any losses, and the kind of run up which we have seen of 35 to 50% in this last 1 week or so, or maybe last couple of weeks, doesn't justify further upside from here. On the contrary, you may be having the risk of maybe some profit booking coming in. So yes, we have in fact advised, in a couple of days back also I've said that when the frenzy was seen, maybe I think day before on Monday, that the buying is not advised at the current level. Stocks seem to have run up quite a lot.
Okay. This is despite the fact that the Cabinet Committee today may look at giving some export subsidy for about 50 lakh tons. That's not material.
See, Lata, that is seen for the current inventory, because even we at the current inventory seem to be quite high at about 10-11 million ton. And I don't know, the transport subsidy of 2,500 per ton is being talked, whether that kind of subsidy will be given or not. And I honestly, if you really see the situation, that yes, once this inventory goes away, then probably, maybe looked into that yes, the things are returning back to the normalcy, which has already seen having factored into the price. So I won't be that gung-ho and that optimistic scene coming in on the transport subsidy of 2,500 rupees per ton, and maybe sugarcane subsidy of about 140 rupees per quintal kind of things, 140 per ton kind of things.
Okay, and also remember that these stocks have rallied substantially over the past fortnight. But let's discuss the other issue. SEBI has batted another one in favor of investors, ordering mutual fund houses to cap their scheme expenses and provide the benefits of economies of scale to investors. But of course, this would result in profitability erosion for the AMCs. A. Balasubramanian, the CEO of Aditya Birla Sun Life AMC, joins on the phone line to talk about that. Mr. Bala, good morning. Thanks so much for joining us. One, how much do you think it could reduce the profitability of AMCs? And two, do you see a market share loss? Because the view is that distributors could migrate to smaller AMCs, because of better commissions that are led by lower, expense ratio cuts. Your views on these two?
Yeah. Of course, what SEBI has done, I think SEBI chairman has shared his views when we had their annual AMFI mutual fund summit. Basically, the reduction has come purely on the basis of the slab, which was set up way back in the 94-95. About 750 crores, there was a flat rate of 1.75. Which they are now looked at in terms of linking to the further the size and the slab. On the basis of it, they have gone for a reduction of expenses. Having done that, but ultimately, the industry is still underpenetrated. Therefore, penetration will continue to remain one of the big area of focus. And having said that, any reduction in expenses does lead to the earnings going down, both for the AMCs as well as for the distributors.
By how much, sir? By how much?
I think the way I see is the reduction in expenses on average, the number of funds who are greater than 10,000 crores or maybe greater than 5,000 crores are the one where there will be a reduction in the TER.
Yeah.
And that of course need to be looked at in terms of what the impact that will come on the AMCs and how those impacts need to be tackled, both adjusting our distribution commission as well as the AMC fees. That's the way I think it will have to shape up.
Okay, so what about market share? I mean, do you see any kind of market share loss from the larger players?
No, of course, at this point of time, if you look at 54% of the assets under management for the industry, 53% roughly, is controlled by our top 5 players, and top 10 players controlled about almost 74-75%. If you look at one from a customer point of view, I think he gets the benefit of course, reduction in fees. At the same time, the larger players who of course have an established track record for many number of years will continue to get their pound of shares as they move forward. See, from a customer point of view, you'll go by one, the fundos who are offering this product. Second is the performance, and third is the service quality, and fourth is the trust element, which also is involved, and fifth, of course, is the engagement of advisors with each of the customers. So all of them, I think, will be determining.
Okay.
Well, easy to assume that, yes, it will definitely disburse some market share from some of the existing players, some of the large players to the small players. But that's we always seen.
No, how much? But Mr. Balasubramanian, won't you be able to pass it on to banks who are selling your mutual funds, to brokers, distributors?
So I think that also again have to evolve. I think if I remember rightly, that we as an industry rolled out a best practice guideline about a few years back, and that they essentially is to bring in some bit of discipline the way the industry functions. See, ultimately, with the reduction in expenses, the whole industry has to evolve in completely new pattern, where you have very clear formula about sharing formula, which is what I think has been highlighted in the AMFI best practice guideline as well.
Oh, right. Okay, Bala, we'll leave it at that. Thank you very much for joining us. The CLSA report is fairly detailed, expecting that the impact will be 25% for HDFC MC, though they say that they could pass it on
to distributors.
that is, they could give less commissions to distributors, in which case a company like ICICI Securities, which distributes a lot of mutual funds, could get impacted, as could be private banks who are very good at it. And so some fee income for these banks could also fall a bit. But we'll have to see how it evolves in the days to come. It's the Bank Nifty expiry
Weekly
day.
options expiry, yes.
Yeah, so we have an F&O expert, and that's particularly important today. Manoj Muralidharan of Religare Securities joins us now. Good morning, Manoj. Nifty Bank has had its fair share of bad news in terms of the way in which the rupee and bond yields have behaved. But today at expiry, what do you expect?
Good morning, Lata. Lata, the difference here is weekly expiry generally there is a concept of max pain, which simply means that the net open interest prevailing in the let's say 200 points above and below, that is where the expiry tends to culminate. Now, if we simply calculate that levels comes to somewhere close to 26,580 on the spot. We all know that the expiry works on the spot basis. So a better strategy here is, because the future is still at a premium of good 60 to 80 odd rupees points rather. I would say recommend buying a 26,500 call option for today's expiry, or you buy futures closer to that level with a stop loss of, let's say, 120 points. So 380 should be a stop loss. 26,380 should be the stop loss. We're expecting the Bank Nifty to surge all the way to 680 to 700. So 26,680 to 700 might be the resistance for the day. This is possible in the first of or maybe towards the major part of the day, because eventually we are expecting the expiry, that the settlement which happens at 3:30 might be somewhere close to 26,580 to 600 on the spot. So yesterday there is huge short which has come into the Bank Nifty. I guess for the first time we've seen around 22%, which is being carried into the next trading session. So possible the September end of the monthly expiry might see some more carnage, but for today's expiry I'm expecting this 160, 180 odd points. So you can better buy the 26,500 call option, or maybe go with the future at this point of time.
Okay, Manoj, hi, good morning. What about individual stocks? What would be on your list this morning?
Sonia, good morning. I like Bata a lot, because this stock has shown, it was on some distribution since last 3 to 5 odd session, but then off lately, the VWAP levels of 998 has worked excellent for it, and we have seen good reversal on the stock. Now, the good part is we are expecting at least an 8 to 9% move, because this has happened with a long built up on the derivative side, and especially towards the last, let's say, 6 to 8 days of expiry. So buying Bata at 1010 to 1015 with a stop loss of 996, and we are expecting a target of 1070 on that. So that should be the first trade. Second is Bank of Baroda. Obviously, needless to say, there is huge short which has come into yesterday's trade. And as I was saying, because these stocks would have a monthly expiry, which is on 27th of September. So even a 100 strike put option, which is somewhere close to 90 paisa to 1 rupee, that's a good risk reward. You can buy that. There is a good possibility it might give you close to 3.5 to 4 odd rupees. So buying Bank of Baroda this month, monthly 100 strike put option and 1 rupees. Obviously no stop loss on that. I guess the lot size around 4,000 on that, and for a target of 3 to 4 is what we recommend at this point of time.
All right, we'll leave it at that. Thank you very much for joining us this morning, Manoj. Have a good trading day and a holiday tomorrow. We'll take a break on that note. We are coming back with the pre-opening rates, and of course we have our guests, our experts still with us.